What's up, YouTube fam? What's going on? It's your boy Stevenson Lindor. I'm back again. With another video. All right, it's been well over 40 days. Got a lot of good feedback on the last one, so I'm really glad you guys enjoyed it. I got another dope training video for you all. All right, as always, make sure you like, share, comment, and most importantly, subscribe to my channel. Share with others, especially those who are just learning how to trade for the very first time. I have a free Telegram community. Um, in the description box below that everybody can join. And then if you want to join, all right, so I still have this ongoing challenge happening, all right. I've actually expanded and actually kept it open because everybody was getting so much value. They were enjoying it. So you get to join me on live morning sessions here and there. I drop analysis, extra nuggets. It's really become a very positive and, refreshing community for, your everyday average trader to come in without having to pay for a subscription or anything like that. So if you do want to join that, email me or hit me up on any of the social media platforms and I'll get you set up. All right. So with that being said, like I said, I got another video for you. Last one, we talked about taking advantage of the daily highs and lows of the daily candle and weekly candle and how you can use that to your advantage. And like I said, I got such positive feedback. So I'm going to expand on that, right? So today we're going to talk about Confluence, how you can basically not only use those daily and weekly highs and lows, but spice it up a little bit and add in Fibonacci, and then in conjunction with the MACD. So basically putting it all together so you have a dope strategy. All right, so we're going to jump right into it. Again, make sure you like, share, comment on this video. As always, I appreciate it. Get this out to your fellow traders, and most importantly, subscribe to this channel. All right, guys. So let's hop to it. All right. So on the last video, like I said, just a quick recap. All right. And a lot of guys messaged me, told me I was working and, it's kind of give you that aha moment on how to use the daily, weekly, and even monthly time frame. All right. So real quick, and I like to do this on the weekly. So you want to take the last weekly candle. All right. So right now, this is the opening of this week's candle. So currently it's only Monday, about to be Tuesday when this video drops tomorrow afternoon. But last week's weekly candle, I should say the week before that, right? That was the high, that was the low. And all you're essentially doing is you're just trading off those highs and lows. So basically, if price comes, for example, to that high, like it did here last week, last Tuesday, boom, right? You're either going to wait for a breakout, and then once you get a breakout, if you get a nice correction move, you'll look to buy. If not, you'll get a reversal. And here's the thing, guys, the market will always tell you what it's about to do before it makes the move. So when price came up here, and this is the thing that most people need to understand when it comes to time frames. All right, guys, think about it. Look at the time frames. You have minutes time frames. You have 1 minute all the way to 45 minutes. Me personally, I don't use 45 minutes. I don't even use 30 minutes. The only time frames I usually utilize within the minutes is the 1, 3, 5, max 15. Then you have your hours time frame, 1 hour, 2 hour, 3 hour, 4 hour. I don't use the 2 or 3. I mostly focus on the 1 and 4. And then you have your days. You have your daily, your weekly, your monthly. Now they had these new ones like 3 months, 6 months, 12 months. Honestly, you don't need all that. All right, you're perfectly fine with the daily, the weekly, the monthly. All right. Now, notice again how they're all broken up. All right, and then of course you have your seconds time frame, which I don't even use at all. Okay, so when you think about it, when it comes to the days, you want to look at your days time frame to get the overall view of what the market is about to do. All right, your overall picture. I always like to look at it like this. If you've ever ordered an Uber or a Lyft, okay, I'm assuming everybody's watching this. You've all ordered an Uber or Lyft at one point or another in your life, all right, especially if you're in the United States. Um, if you notice when you ordering that Uber, what's the first thing on the Uber app uh it does? It gives you the whole map. All right, that's what the days are for. Whether you're looking at the daily, the weekly, you want to look at the whole map. So if I go to the weekly right now, all right, it's going to give me the whole map. It's going to basically give me an overview of what's going on GCAD. All right, what's going on GCAD. Then on the Uber app, if you notice, once it figure out where you're going as far as destination, what it's going to do is going to zoom in on you and the driver's location. All right, that's where the hours time frame comes in. Okay, boom. We're going to zoom in. You're located over here. This is where current price is at, right? This is where current price is at amongst this consolidation over here. And then after that, you have your minutes time frame. Your minutes should always be your entry. So your daily, right? Your days time frame, whether you're on the daily, the weekly, monthly, right, is your overview of where price is going to go. Your hours, that's where structure is. Okay, you're trying to figure out, is price looking to reverse? Do we got a double top, double bottom, or we buy a supply demand zone, so on and so forth. Your minutes time frame, that's for your entry. All right, so you don't jump on the minutes until you're ready to enter the market. Oh, excuse me. Until you're ready to enter the market. Okay, that should be your final. So looking at GCAD from last week, all right, price came up, boom. We're at this high here. So I'm on the 1 hour. Whew, excuse me. I'm at the 1 hour. And if you look at my MACD, I'm kind of basically at like a retest. So at this point, are we breaking up to the upside or are we going to the downside? I can't see that looking at the 1 hour time frame. So again, if I want to get my entry on whether I'm going to get this buy or sell set up, I have to move down to the smaller time frame, ladies and gentlemen. I have to move down to the smaller time frame because whatever is going to happen, whether price goes on an uptrend or a downtrend, it has to happen on the minutes time frame first. It has to. All right. How can an uptrend happen on the 1 hour, on the 4 hour, on the daily, without it happening on the 5 minute first, the 3 minute first, the 1 minute first, right? So boom, here we go. Now, when you drop down to the minutes time frame, and I've stated this multitude of times, right? You get more information. All right, you get more information. So price is pulling up. We got this resistance right above us. So now we're trying to figure out, are we going to get this buy or sell? Well, look over here. Remember, we're going up. We got these higher highs. Perfect. We got these higher highs. But check this out. Price came down, boom, and then we get a change of character. We get a change of character. Once we get a change of character, as we know, that is a potential trend reversal, right? That's a potential trend reversal. So I got this change of character. Price broke, boom. So now, when price pulls back, I want to see if it's going to create a new high. I want to see if it's going to create a new high. Now, this is the part where a lot of traders really, really struggle because during this consolidation part, all right, I always tell people when you start seeing multitude or multiple price action of bullish or bearish candlesticks, that should let you know if you should jump in the trade or not. All right. But what a lot of traders struggle on is overthinking. All right. They get inside their head. They're wondering, should they jump in or not? Now, I actually just posted this in the free Telegram, right? I want to go in here and I want to show you guys something. Not the Wall Street. Got a lot of telegrams here. So right here, right? Trade entry. See this? All right. So whether I'm buying or selling. So as you can see, multiple bullish candlesticks, right? And then you get your bearish, right? You get your wick, your rejection. Then after that, you get a bearish, a strong bearish candlestick. And what you're mainly looking for, you see how this bearish candlestick closed below this last bullish candle? Let me draw on here so everybody can see what I'm talking about. So this was your last bullish candle. See how this bearish closed, the body of it closed below this bullish? See that? Wait. So whatever time frame you're trading on. So if this is a 5 minute, you want to wait for this entire 5 minutes to close because as you guys know, price can begin to go below or above that candle, and then right before it closes, it pulls back. So you always want to wait for it to close. That's why it says, right? Waiting for candlestick closure. Waiting for candlestick closure. That's very important. So if this happened to be a 1 hour, I want to wait for that entire 1 hour to close. 15 minute, I want to wait for that entire 15 minutes to close. 5 minute, that 5 minutes to close. 4 hour, daily, whatever time frame you're looking at, you want to wait for that time frame to close below that bullish or bearish candle. So in this case, this bullish close, perfect. The next candle that opens, that's going to be your entry. That's going to be your entry. That's why I say price action, guys. Once you get that retest. So over here, let me go back to the charts. Once I get that retest, all right, price pulling back. Perfect. No problem. Now, what I'm looking for a bearish candlestick to close below the last bullish candlestick. So I get my retest. Bullish, 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 right? Bullish, bullish, bullish. So body. Let's look at it. Almost. I would have liked to see the full body close below this wick. It almost made it there, so I really wouldn't catch that. Then you got another bullish. Then you got another bearish, right? This somewhat did it, right? I would have liked to seen a more aggressive bearish candle, but I wouldn't hate you guys if you use that, right? So let's say my first entry would have been right there, and then my stop loss above that high. My stop loss above that high. That's where my stop loss is going, okay? My stop loss is always on the same time frame I'm looking to enter. All right. Then you got a bullish, bearish, bullish, a strong bullish engulfing, then bearish, 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 bearish. So boom, look at this bearish candle right here. This is what I like. See that? That's clear as day. See how it closed below this last bullish candle? So again, my entry would have been there. And then you could have put your stop loss above here, but to be safe, above that previous high. Right? To be safe above that previous high right there. And then, right, because your overall outlook was on the higher time frame, my entry is here, and then there's your sell setup, right? So now you're getting actually another bearish flag right here, right? A nice correction. If you look at your MACD, a nice retest right here. And this is where I'm going to bring out the extra tool, the Fibonacci tool for extra confirmation. Now, this is how I utilize the Fibonacci tool, okay? Now, there's tons of videos out there, guys, with people showing you how to use Fibonacci. Here's the thing with trading you always got to remember, guys. It's from everybody's perspective. From everybody's perspective. It's how you use the tool. Everybody uses indicators, tools, totally different. All right. It's at the end of the day what works for you. Nothing is really wrong. All right. It's nothing really wrong. You have some traders that, are wonderful with moving averages, others who don't use it, right? You got some traders that use no indicators at all, just strictly price action. And then you have some amazing traders that need it. They need indicators. So at the end of the day, it's all on how you use it. It's all from your perspective. It's all objective at the end of the day, right? So when I use the Fibonacci tool, all right, I'm always measuring the leg of the move, all right, whether I'm in an uptrend or a downtrend. So notice right here, this is actually a down move. Why? Right? Easy. You could always tell whether you're in an uptrend or a downtrend, especially when you have the MACD right here. Notice this bearish wave. If I compare it to the previous bearish wave, if it's lower, like it is here, I'm in a downtrend. If it's higher, like here, right? See how this was red and the previous red? See, this is higher. So I know I'm not in a downtrend. I'm actually in an uptrend, right? Because I got the higher highs, higher highs, higher highs. So now I'm getting the lower lows, right? So I'm going to take my Fibonacci tool. And of course, yes, before you ask, this works on every time frame. I'm going to take the high of this bullish wave and bring it down to the low. And the areas I'm always targeting for my entry when it comes to the Fibonacci tool is the 5, the 50%, and the 618. So basically inside here, right? And then after that, I have the extended fibs, right? The 786 and the 886. Right? Those are the two areas I'm going to look to short at, right? So whether price pulls back here and drops or extended right here. Because remember, I'm in a downtrend. I will only look to buy again if what? Price breaks not only above here, but above that last weekly high, right? There's a reason why we have last week's weekly high, weekly low there. Because we know once price breaks out of there, we'll know if we got to buy or a sell. All right? We know if we got to buy or a sell. Right now, we're inside. Last week, price did not break. So again, we're looking for a short opportunity. And then what do we do once price gets inside the zone? I drop down to the smaller time frame, right? And I wait for my sequence. The same way on this 1 hour, price pulled back, I drop to the smaller time frame and I wait for the sequence. I want to wait for a change of character. I want to wait for a retest, and then I want to look to jump in for my buy or sell. So I don't automatically, I mean, I can automatically jump in here and just sell or jump, right? I always tell people, watch on minutes time frame, right? Because that's where I'm supposed to be entering for entry. Because if we're going to get a sell set up here, right, that sell should be happening. That sequence should be happening on the smaller time frame. All right. Does that make sense? So now I have a whole strategy on how to trade this. All right. So if I'm looking at this from a bigger time frame perspective, right? Again, if I wanted to add the Fibonacci tool, right? We were going up, then price broke, right? Look at this bearish wave compared to the previous bearish wave. So we broke. So we're going down. So I want to take the top of this and measure. All right. And again, I'm looking for entry at the 50, 618, and then the 78688. If price was to blast beyond that, that'll be my next entry zone area. All right, everybody got that? Does that make sense? Okay, and this is something you want to practice. You can do this on every single time frame. Obviously, the higher the time frame, the bigger the confirmation, the stronger the confirmation, but the longer the wait. So really, if you want to get activity, you want to dance around the 1 hour, 4 hour, smaller time frame, right? And you just want to get used to just measuring that leg. So putting this all together, right? So JPYs this week, they all got some amazing sell setups, as you can see here. See that? Boom. So let's start this from scratch. I go to the weekly time frame. All right. Last week's high and low. Let's just mark that off. We know. So we know eventually this candle is going to break above this high or break below. So we got the high and low of last week. This is our current weekly candle. Perfect. Let's go down to the daily. Right? So we know we're currently right now not in an uptrend because we did not create a new high. We're not in a downtrend. All right. We're just in this sideways market. So got this consolidation here. Let's go down to the 4 hour. All right. So boom, we broke. Let's use the fib here. Measure this leg from this high to this low. Now notice how price came up to that 618.05. This is why I don't automatically assume and just sell. This is where going down to the smaller time frame and waiting. You want to watch for that sequence. All right. Minutes time frame, always for your entry, ladies and gentlemen. All right. If you're not on the minutes time frame, looking for your entry, you shouldn't be in the trade. Right? So price gets up here. So now, again, what am I looking for? I'm looking for the sequence. Right? There's my change of character. Right? There's the break. These are equal highs up here. Boom, boom, boom. Then I get my break. Let me get my brush. It's my break. All right. Now, because I got asked this, what happens if price doesn't pull back into your zone? No problem. Wait for the next break of structure and then the next retest. Next for the next break of structure and then the next retest. All right. You will always. So, for example, like right here, you see that? Let's say break and then price went up. They will always break, wait for the next retest. Break, and then wait for the next retest. That's how you want to do it. You want to always wait. So this was your high point. This was the change of character that we needed. This is actually a retest, basically like on the 3 minute, 1 minute. But if you don't catch it or price doesn't pull back, you wait for the break and then you wait for the next retest. All right. So looking at all JPY, we can see price is coming down, right? And if I wanted to take this 4 hour, because this was a 4 hour measurement right here, I can take this on the 1 hour, all right? It was coming up. You can tell this is very corrective. This was the last pullback on the MACD here, broke that. So I want to measure this leg from this high to this low. Look where we're at. This is exactly where we want to sell. Right inside here. Right? And what did I say? Let's go down to the minutes time frame. Right. We could even take this down to the 1 minute. So look at that. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. Boom. I want to see a pullback, right? Look at all these inbounds candle. My stop loss would be right here, pullback, wait for some bearish activity, right? Wait some bearish activity. Close there, and then boom. Entry, stop loss above, or if that's too short for some of you guys and you want to extend your stop loss, you can go above previous highs, stand it up at the 786 or a little bit higher. Try not to do more than like 30, 40 pips. And then this is the sell that I'll be looking for. See that? So we'll be entering on 3 minute, 1 minute up here, right? So we're waiting for the sequence. We got our change of character on the 1 minute. So now we're just looking for a nice pullback. And then we'll be looking for a short opportunity. And that's literally how it works. This is how you combine everything, guys. Fibonacci tool with the highs and lows of the last week candle, right? So we're looking. So if this drops and then this breaks below last week's weekly candle, guys, we already know we're good to go. We can really, really sell this bad boy, right? Look at that. If the daily or weekly candle breaks below last week's weekly low, guys, we got a big sell coming up. Big sell coming up, right? But it all starts here. Same thing for, let's say, New Zealand JPY. Actually, New Zealand JPY already taken off. Or matter of fact, let's do USD JPY. A lot of people waiting for that. Right? So what do? Take last week's weekly high and low. Let's zoom in here. Last week's high and low. Perfect. As you can see, price is basically right near there. All right, perfect. So now we're around weekly high. Some of you know what's formulating already. We're getting like a bullish flag. I would love to see price break below this bullish engulfing candle if we were going to get the buy. If not, I would like to see this kind of break and then come down, right? But that's what I see on the 1 hour. Let's drop down on the 15 minute. Let's see what's going on. Interesting. Feel like structure is changing. Right. So let's go back to the daily real quick. So obviously we're in an uptrend. So if I was to take out my fib tool, retracement from this is the last dip, low here, boom, and go up. And for those who ask, what's my fib settings? Let me double click, take a screenshot. There you go. As you can see, I don't really care for the 23 and 38. So I'll remove that. All I care about is 618, right? 50, 786, 886, and the extended fib levels. All right, take a screenshot or pause the video. Right. I hate trading views Fibonacci too. It's too colorful. There's my eyes. There you go. Pause this for a second so you guys can get all this. Right. All right. So yeah, so as you can see, clean. And then if you want to add or remove, you can do that to your liking. So I can already see based on this uptrend, obviously what? We got to get a retest. You got to, right? Boom, pullback. Boom, there's gonna be a pullback, at least to the 50. So we're at 149. Back to 143. That's 600 pips. Well over 600 pips right there. Right? So it's a matter of when. Definitely once price breaks this last week's weekly low, we get a break there. Boom. Retest. Oh, we're gonna have a nice sell-off. So this week, you definitely want to keep an eye out on UJ. All right. So it's a matter of, are we going to break up, create one more high, or are we going to break down? All right. I think we'll know probably by tomorrow, Wednesday, the latest of what this is going to do. But again, when you look at the smaller time frame, 15-minute, lots of structure changing here. We might get a small sell setup. Again, we would need, if this is going to really break down, we would need a breakout of here, right? So 1 hour, last low, right here, measuring this leg. So yeah, this is perfect. And this is why you want to have everything in place. Last week's low, last week's high. So if we're going to sell, right, watch for sell here. All right. Or let price break out of this, get a sharp move down. Right. Break the structure and then come down here. Now, again, this can go back up just like it did right here. All based on what price action does when it gets to the bottom. Are we going to get a nice flag or are we going to get a reversal? As you can see here, we got to change a character, a retest for a buy up. Right. With the strength of JPY, I'm expecting a breakout and then a continuation to the downside. All right. As you guys can see, this is how you can put everything together. You got your fib level, you got your weekly highs and lows. So you're prepared to watch where price is either going to continue going up or going down. All right. Put it all together. Have a system in place. Have rules in place. This is what's going to protect you when you're trading on a day-to-day basis. All right, guys. The whole purpose of my channel is to help you so you can create your own trading strategy. So you know this is how we do it. All right. And again, if you're struggling and you need some guidance, you need some help, you need some practice, please, again, hit my Telegram. You can either join the Wall Street Telegram when you want to sit there, or if you want to join the challenge, shoot me an email, holla at me, and we'll get you situated. Right. And these are the things you want to practice on. All right. Definitely in the moment. So I got UCAD. I'll give you one more example. So we got UCAD here. So we're looking for a sell. Price just dropped off. So USD CAD, we got this uptrend here. Boom. Let's go up. Got a nice bullish flag right here of this going back up. Nice bullish flag. Weekly candle. Last week's weekly high and weekly low. Always want to mark that off. Because you know, eventually price is going to break out. Right? Price has to. It has to create a new high or has to create a new low. Right? Right now, we're stuck in the middle. So by the end of the week, we either going to break this low or we're going to come back and be stuck at this high or break this high and continue going up. I think we're going to create a new low. I think we'll get a small buy, and then eventually this is going to come down, right? Grab these imbalances and come down into this demand zone here. We'll see. This is not where you want to trade. You don't want to trade in the middle here. You always want to trade at the top or at the bottom. Off the top or off the bottom. And then drop down to the small time frame and then wait for the sequence. And then the purpose of the Fibonacci tool, always ride your trade to that extension level. Whether it's going up, all right, we're going back to 0. Whether it's going down, all right, perfect. All right, we use like 2 hour. Perfect. I'm going to the 618. I'm going to the 786. I use the fibs as potential entry area and also take profit area, where to get out of the market. Gold had an amazing move to the upside last week, right? So last week's candle. Right. Now, you don't have to do the daily. Again, guys, that's my preference. You don't have to do the daily, but let me measure this leg. We're coming down. And then voila. So you see how price broke last week's weekly high? And then what did it do? Continue going up. And then you would take profit at each fib level. And if you're looking for price to pull back or reverse, again, once it gets to those fib levels, what do? You drop down to the smaller time frame, minutes time frame, and look for the sequence. Change a character, retest for a sell or buy. Right? So 5 minute. So you see that? Change a character. Perfect. That small retest here. And if you miss your potential entry, wait for it again. Break, retest, and then sell off. All right, sell off. So my entry would have been right around here. After this 5 minute candle, entry there, stop loss above. They go a little bit higher. And take off. So around 1918, 1912. Nice 50 pip move. And you got a small sell setup happening as we speak. By the time you guys see this video, tomorrow afternoon, price will be pulling back probably a little bit more. Come down here before continuing up, right? You can see getting a nice bullish flag for that. We're above last week's weekly candle. Look for that to continue going up. All right. So just wanted to cut this video. All right, guys. I like to make them short, simple, and sweet. I don't want to do them overly too long because I know people's attention spans are absolutely atrocious. But this is how you can bring everything together. All right, utilizing the Fibonacci tool, identifying last week's weekly high, low, right? So now you got a strategy. All right, now for those who struggle, where do I exit out of? All right, the next fib level. Where do I look for a potential entry if I'm looking for that at that fib level? But always do it on the minutes time frame. All right, make sure everything is in conjunction with each other, in alignment with each other. Trade what the market is giving you, not what you think the market is giving you, what it is exactly giving you. All right, always use proper risks. Practice more than you trade, and I promise you, you will have a solid system. Now, if you want to know how to really put all this together and you want to be part of a group that supports each other, that's trading with each other. Again, hit me up, let me know. All right. So, as always, guys, comment below. Let me know how you feel. Share this with others, like, share, comment, but most importantly, subscribe. And I'll see you guys on the next video. All right. Take care. Stay blessed.